What's going on, guys? Today I wanted to go over three charts: TIGR, EOLS, and LX, which is a new IPO. All three showed what failed follow-through momentum and heaviness really is. I get that question a lot. What do you mean the stock is heavy? What do you mean the tape is heavy? And how can you tell? And what should the chart look like? What kind of things do you look for? And so I think that these are three really great examples. Typically, I look for a daily chart that is out of the range, out of the normal range. So for example, this one's under the all-time support, which was obviously IPO day, but it's also gapping under and well below the recent support, where you can kind of see it was basing, and it failed. And then also EOLS is another great example where you're typically in this range right over here, but now you're gapping under it, and you're into uncharted territory. You've got a lot of emotions involved, a lot of stuck holders. You had a lot of volume up here, you had a lot of liquidity, and now it's completely unwinding that trade. So that's typically what I look for this setup. But the reason I wanted to show you LK as well, which was an IPO today, is because it showed all the signs that we look for failed follow-through momentum and heavy tape. And that's why I was short the name. So the goal last night, which I can put a couple snippets once I do a blog post associated with this, but the game plan last night was that it was a nice short idea the following day, and I was anticipating that I want to keep on shorting because I feel like they're selling a lot. And I think that they're going to still keep on dumping, and it's a failed follow-through momentum type of setup. So typically what I look for, and this had earnings this morning, and it was a little bit of just light volume and stuff. So this isn't really a trade that I could take this morning. It was only after the open that I would feel comfortable taking it, because you don't really know how it's going to react to earnings. Just like pins today had earnings, and it might have been like this, and then all of a sudden it rips up. So what I like to do is wait for the edge to come to me, which is typically after the market opens. So normally, which you'll see with EOLS next, I look left to kind of predict right. We went over this on the last video that we did. So you can kind of see that this prior base may now act as a resistance point. And it did right over here and pretty much over here. But it was all light volume. Nothing you can really look at or trade. So the next thing is I want to see it ramp and fail. Whether or not that's red to green, whether or not it's still red, whether or not it's into VWAP, whatever the case may be, I want to squeeze the shorts, whatever shorts may be in there, out first. I don't want to be part of their squeeze. I don't want to be starting in and then having the emotional shorts cover and then me question whether or not I was right on the trade. I'd rather that happen and be able to take advantage of it as my initial entry. So you can kind of see it's been all failed follow-through momentum, pretty much pulls back in the open, and then it rips right at the open, and it stuffs into pre-market resistance. And as that happens, it slams right down. And sometimes that happens, and then it consolidates, and then you start to see it continue on. However, if it stays heavy, that's showing you that the tape is heavy. It's showing you that there's sellers there. It's showing you that there's pressure on the stock. So what do I mean? Well, if you guys remember, a lot of the videos that I do, I talk about the wicks and how I want to see wicks like this down here on a daily chart where they pull back and then they buy it back up. They pull back, buy it back up. Pull back, buy it back up. It shows that there's support. That's what I want to see for a potential swing trade or a breakout. However, if you flip that around and you see the wicks, they're tall, slams down, tall, slams down. What does that suggest? It suggests that there's a seller there. It suggests that there's pressure there. And it suggests that somebody's leaning on the name. Meaning, every time it looks to break out, or it should break out, or it should have rebounded, if it doesn't, something's there. For some reason, it's not. It's because there's pressure there. It's because it's heavy. And in this case, it keeps on failing into VWAP over and over and over and over again, and then it eventually unwinds. You can always draw a line under the recent support, And typically, you know, if you find resistance, failed follow through, failed follow through, failed follow through, you can kind of see it's going lower, lower, lower. Typically, when it cracks that prior support is when you get the nice floodgates opened. So this is a great example of exactly that. I'm not looking to be a hero. Yes, you can start some into the parabolic there. This is a perfect example of I'd rather be a little bit late to the trade than be too early and end up either kind of adding and have some type of stubborn trade happen, or just be $1 or $2 too early. I'd rather be a little bit later to the name and not have to question my trade because of some emotional covers off the open. So you can see it slammed down. It's proving to you that, hey, you know what? There's a seller present today. And then at that point, I wrote in the room today that I like to lean on all pops versus VWAP. So that's a perfect example of what I'm looking for a potential chart unwinder. Now, anytime it flushes out, I absolutely like to cover some just to be sure, just to be safe, that it's just not a flush and then a rally right back up. Because you've seen it so many times, Uber recently, even on pins today, where you know it flushes out and then it snaps right back up. So it's always good to go ahead and lock some in just in case. But if the tape stays heavy, and in this case, if it's going to rebound, it should be kind of holding a higher low and start to grind and maybe develop some type of ABCD type setup, or whatever the case may be, it should be a little bit cleaner. In this case, ramps up, stuffs, ramp up, fail, 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 unwinds. So at that point, all the dip buyers just get smoked and it unwinds again. So that is one great example of a failed follow through momentum chart unwinder. And another one, EOLS. This was another one from Scan last night. And the reason for that, once again, is it's under all this chart support. It's had a large market at a higher level. It's gapped under that. It's gapped under recent support. Even this low, it's filling the gap. There's so many different things that are all coming together that suggest that it should have a high average daily range, at least for the next couple days before it starts to consolidate and potentially kind of go off my radar. So in this case, this, like I said, is a little bit cleaner as far as looking left to kind of predict right, and it also had more volume. So in this case, you can see yesterday, nice and heavy all throughout the day. And the goal last night on Scan was watching morning shove and more failed follow through momentum tomorrow. So again, once again, we talked about categorizing trades. So this would be a failed follow through momentum setup for a chart unwind. So look left to predict right. You can see that this line right over here, this prior support, became resistance late day yesterday, and then unwinds, and then this morning it goes back and kisses it. Wants to retest. It wants to make sure that, yes, this is the top, okay? Anybody that was early to the trade gets squeezed out. Any leftover shorts from yesterday get squeezed out. Dip buyers maybe buy in, then they can panic later on, whatever. But perfect retest and then fail. That entry into the ramp may not be for everybody, right? Typically, if I do that, it's a very small position, a quarter, maybe a fifth size, something like that. Just to get a feeler out there that I know I want to be short here. I did the work. I'm interested. I'm looking for a failed follow through momentum. For most people, it might be smart to just wait for it to pull back and then prove itself into a fail on this VWAP level. Pull back, fail, fail, and like we talked about, you know, once it starts to crack under that prior support, then it starts to really unwind. So very fantastic trade opportunity. Once again, the rallies, instead of kind of basing and starting to consolidate, it stayed rather toppy. And you know, once again, rebound, fail, rebound, fail. How can you tell if the tape is heavy? It's under VWAP. It's fading off, it's unwinding, and the tape is not basing, it's not grinding, it's not perking up, it's not doing any of the sort, and it's just staying heavy. That's where the term comes from. Anytime that a stock should break out and it fails, you should take note. anytime that it's basing and it has a little bit of a, let me go back on Tiger and show you. If it's got a base, but it's not making higher lows, so in this case right here, it's basically got 650 support. If it's making a base, but it's lower high, lower high, lower high, lower high, that's suggesting that it's heavy until it breaks through. And once again, it's under VWAP as well. So those are a couple things to take notes on. Last but not least, not necessarily a chart unwinder, but what do you look for when the tape is heavy? What are you looking for to get an edge here? What are you looking for when things reverse to kind of stick with a trade? So this LK, for example, LK was a short for me today. It was they IPO'd at they priced at $17 a share, and they opened it up around 25, which is crazy. But you know, in this market, anything's possible, right? And so anyway, I let it ramp up. I wasn't trying to be a hero. I've been a hero before, and I paid for it. You know, even BYND IPO day rips up $4, $5, $6, and I short not size, but I shorted some, and then it just keeps on ramping. So in a situation like that, you know, you're gonna get bent up, and it's not smart. I'd rather let everybody blow out first and then come in. So once they kind of blew it off, then it slammed back down. I started to kind of put in some offers and started to get short. And so I originally got a few, and then I borrowed some more, and I borrowed some more, and borrowed some more. And I added to a winner, So in a situation like this, I basically had a 25.60, 25.40 average. I added some to 25.20s, and it flushed out, and I covered into that flush. Reshorted a little bit, and maybe a little bit too low here. But again, I'm not using as much size on the second trade. But what was I looking for when I reshorted throughout all the day over here? I'm looking for wicks versus VWAP. I'm looking for the rebounds to fail. So in this case, since it's still early in the trend, I am still covering into flushes around a core. But as long as the tape stays heavy, I'm looking to lean into all pops. So in a situation like this, you should start to see the same things over and over, right? You can see a base here at 23.70s, right? So essentially around here, this obviously went under a little bit, but this base, then this bottom became the same level, this bottom, same level, and as soon as it cracked, it flushed out another couple bucks. So we had another unwind, and then we started to dance around a little bit, but again, we're still now peaking out at what was the prior base. And each ramp, instead of consolidating, instead of rebounding, consolidating, and holding higher, flushed right out. So anytime that happens over and over again, after they rebound, flush out. After they rebound, flush out. Same thing over here, consolidates for a couple candles, flushes out. That shows you that there's a lot of sellers there, because what's happening is all the volume is coming into the offers on the way up, but as soon as that volume is done, the bids are gone. This right here, this is a 21.80 to 21.10 range. So it's 70-cent drop in a minute and a half. Same thing here, fails and unwinds. And in this case, I did have one fat finger on this thing today. I think it was right here. Yeah. Right over here. This one I was really almost mad. But you know, you can see you need to be shorting into strength on something like this. But once again, wicks, seller, seller. And as soon as the seller came in for the bids, they were gone. They were already gone. So in a situation like this, it's everything that I look for. Same thing, rebound, comes back up, fails, unwinds. So this is a perfect example of chart unwind typically, but since it's only an IPO, this is a perfect example of an intraday unwind. I want to see all rebounds fail. I want to see every time that it should go, I want the bids just to be gone. Because you know that all the volume that came into the offer, if they were longs, now they're underwater. If they were shorts, now there's nobody left to cover. And their entire goal in order to keep this thing trading is to continually make it look like it's going to rebound, but never let it go back up. Because if they let it go up too high, then everybody that's been averaging down is going to have an opportunity to sell, right? So if their entire goal is to liquidate today, they need to keep it rebounding to keep you interested. But as soon as it's about to get break even for somebody that's been averaging down and averaging down and averaging down, that means that they need to be right in front of it, because now they're going to have to compete with you as a seller as well. So that's why you always see these kind of go back up almost to break even for on a move like this. So you see it kind of coming down, flushes out. Okay, this versus here, lower. Right here, this high versus right over here, lower. Again, and again. And so on and so forth until finally all the dip buyers unwind. So this is what heavy tape looks like. This is exactly what you want to see on a regular basis. You want to be able to identify this type of stuff and see it on a regular basis so that it can kind of help you with your trading. So if you guys have any questions, reach out. More than happy to help. You guys really liked the last YouTube video that we did, so I'm doing this one again just to kind of go over another kind of trade thesis, or at least idea about trading chart unwinds and how do you look for stocks that may potentially have higher than average daily range. And just to kind of repeat, if you look at something like a Twitter that's stuck in this range right over here, or let's go with something like Snap. These things are stuck in this daily range right over here. The days that you get really good trades are like this day right over here, these 2 days, where it gaps through that daily range. But now we're stuck in this consolidation pattern. If you just draw a couple lines across, you can see that it's stuck between, let's just call it 10.50 and 12. And so when they're like that and they're not under or over that level, then you don't have an edge. You don't have the higher than normal average daily range. You can even go as far as to say OTLK, which was just a recent runner. Something that's faded since they did the offering, kind of came down, gapped through, and is through the chart resistance. And then we had a huge breakout today. Huge move. Why? Because it's not trapped inside this chart resistance. It's above, beyond, and it's got the volume to support it. One other example, ZYNE. This was originally a swing idea, and I didn't hold long enough, but as you're looking at this chart, you pretty much got consolidation between 11 and 13. There is trades here and there, especially this washout and whatnot, but not really an edge until it really starts to break out, unless you're obviously just holding it long or something like that. But the days that it comes on my radar, the days that, in my opinion, you can have a better edge than other days, are days when it breaks out of chart resistance or chart support. So that's the thesis of this entire video lesson tonight. Anticipating range, identifying it, identifying which ones could have the potential, and most importantly, how to enter those types of stocks. So again, morning emotion is the best. In a perfect world, you'll get a little bit of a ramp right into the resistance. It's not always the best thing to short into that ramp, just in case. You never know, right? They could keep on going. Sometimes it's better just to get a little bit worse of an average, but with less risk. So as it pulls back, let it confirm and prove to you that your thesis is correct. Same thing with Tiger. Same thing. Rather than try to find a pop, you could be anticipating it into this 670 push, but then you start to kind of panic and cover into the sevens or something like that because you weren't really prepared for it. You weren't really sure. So in a situation like this, let it do its thing. Let it dance around and then let it prove that it actually wants to unwind. And there's no reason to be all ridiculous size into this area where it could easily just reclaim VWAP. The idea is to start in there with an educated risk and then scale into the trade as it proves itself. And then, again, just to recap on LX, this is another example. As you saw, with my ads, you know, I didn't put it all out there at the top. You know, this could have easily gone a little bit higher. But I had no problem adding as it confirmed my thesis. And on top of that, I had no problem adding because I was trading around a core. A lot of people use different terms for trading around the core, but essentially, you have your starter, you scale in, you cover some. So say you have 2,000 shares to start, you go to 5, and you scale into 10, you cover 5, you scale back into 8, you cover down to 4, you scale back to 8, you go down to 4, and so on and so forth. So the trading around the core is kind of what keeps emotions in check, but also gives you a little bit of a realized gain to let your trade work versus just going, you know, all, not necessarily all in your account, but rather than just doing all in one trade and, you know, I'm either going to make money or I'm not. It doesn't need to be like that. What you can do is just start in. If you nail that flush, cover some. You can always re-add. And the goal is just to kind of add into some pops along the way and just basically trade around that core throughout the day. When it gives you an opportunity, like a push over here, that's a great time to kind of rescale into a trade. Another example here is, you know, you've got this nice big washout. You might have traded around a core, and then you had the ability to re-add versus VWAP, which is a trade that I took today, shorted into this ramp with a risk based off of VWAP, trading around that core from earlier. So if you guys have any questions, feel free to reach out, leave a comment in the comment section. I do hope that you enjoyed this video, and I hope you guys all have a great night.